Morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw. It's Monday, it's the 23rd of January, and you can see my email address, r@fxcm.com. And of course, any queries, you can just send your emails through to there. I'm just going to bring up our disclaimer. So the first disclaimer is the high risk investment warning. Can you guys just confirm that you can see the screen? Can you hear me? And can you see me on the camera? Just let me know. The three yeses. Thanks, Joachim. Hey, Raj. Morning to you. Hey, Mia. Okay. Thanks very much. But there's a few coming through, so you guys can hear me. All right. I'm working with two monitors. So again, if I'm not looking directly at the camera, I beg your pardon, but I'm just looking between the two monitors. All right, let's just bring up the next disclaimer, which would be our market commentaries disclaimer. I hope everyone had a good weekend, and we'll see what the charts are telling us right at the beginning of the week. All right, and just our references, Market Scope and Trading View. We're going to start off with Trading View, because I think this is a good chart to start. This is our real rate. Just to give you an idea, we're looking at the US 10-year minus the break even. That gives us the real rate. And a morning to you. Nice to have you on the webinar. Thanks everyone for joining. What I'd like to do is get you guys to focus on this candlestick here. Okay, so this is last week's candlestick. This one over here for the real rate. I'd also get you to consider the candle from 2 weeks back, but let's just hold off on that and let's just concentrate on last week's candle, because it's effectively setting the tone for, I think, the trading environment for this week. And you can see this candlestick from last week in terms of the real rate. It's an uncertain candle, okay? You've got a lot of buying activity to the top side. You've got a lot of selling activity to the downside. How did we close for the week? We effectively closed relatively flat, didn't we? So the fact, this is called a spinning top in candlestick parlance. Take a look at the daily chart. Okay, why is there a week of uncertainty? Okay, so the daily chart actually gives us a good indication of what's happened. So you can see this massive down day. I'm going to just bring this arrow up again. You can see this massive down day. This is on Wednesday. Okay, and well, why is there such a big down day on Wednesday? What happened? So we had a few calendar announcements. So the first thing was the PPI came in weaker than expected. We also had retail sales, which really showed poor retail sales, and we saw industrial production, which was also a downside miss. So we just had real interest rates tanking to the point that they gapped down on Thursday. But then we had Fed officials trying to talk up the rates. Okay, so markets pushing down, Fed officials pushing back against that, and that's effectively resulted in a weekly candle, which is an uncertain candle. And that's how we start this week in terms of interest rates. Why are we starting with interest rates? Because it's interest rates which are driving the markets at the moment. Now, the Fed's just gone into its blackout period. We're getting the next rate announcement, not this Wednesday, but next week, Wednesday. So the market's now thinking, well, the data's poor, but the Fed officials are still talking a tough game. Incidentally, not all of the Fed officials are. There's now starting to be a split. Some are saying more moderate rate hikes ahead. Some are saying, no, we still got to get higher. Inflation's still a problem. So the market, that's why we've got that uncertain sentiment in the market. It's very uncertain at the moment. Now, let's just bring up my arrow again. So we've got this uncertainty from last week. So let's try and get some sense out of maybe if we incorporate the week before. So now it's not going to help us. The week before was also an uncertain candle. You got a spinning top, spinning top. So even if you put these two together, effectively we're going to get a spinning top with maybe a slightly bigger real body. But in effect, what we can do is bring Microsoft Paint over. So what I did was, this is last week's candle, this is the candle from the week before. And what we can do is we can combine these. So take the range. So what's the highest high? The highest high is from last week. What's the lowest low? The lowest low is from last week. We kind of draw these in. And what I'm trying to do is I'm trying to combine these two candles, and I'm trying to get an assess what's the sentiment like over the last 2 weeks. It's not going to help us. Here's the open. Here's the close. We're just going to get a bigger candlestick. Okay. And it's just looks like that. So the idea is uncertainty is pretty much rife in the market at the moment. We are also in the middle of earnings season. I think there's a certain uncertainty that is being carried by the announcements. We're getting Tesla this week, Microsoft this week. I think Intel comes out this week. So I think Tesla in particular, there's a lot of uncertainty around that. And we looked at the Tesla chart last week. There was a big head and shoulders on it. If we've got some time, let me write it down. We'll take a look at Tesla as well. I'll forget if I don't write it down. All right. Now, what's the big idea of this uncertain candle? Well, this again, I want to retrace what's driving the market. Let's bring in the DAX underneath this. We're looking at this on a weekly scale. Okay. So we had let me change candles to, it's going to be easier if I use this one. So you can see uncertain spinning top from real rates. Look what happens to the DAX. Uncertain candles is a doji. Okay, so the market sentiment's been fed directly from the real rates. Okay, let's look at another chart. Let's take a look at euro US dollar here. Okay, got an uncertain candle from real rates. Lo and behold, and this is on the this is on a weekly basis. You've got an uncertain euro. Okay, euro by and large is looking good if we had to take the peaks and troughs. But just taking a look from last week, because this is what's dominating as we start the week. We're going to get some direction as we open up, but it's very difficult to get that direction because of the uncertainty from last week. In other words, how did we end last week? Uncertain. How are we opening? Uncertain. Okay, so we've seen the DAX. We had a doji on the DAX. We've got the euro here. What we got? Got a doji. Okay, all feeding off the uncertainty from real rates. Okay, let's take a look at a few others. Let's take a look at the US dollar. Okay, so we've got this uncertainty from real rates. Again, surprise, surprise, we've got uncertainty on the greenback. Okay, that's how we're starting this week. So we're getting uncertainty in all these charts. Spinning top from the real rate, dojis. What have we looked at? We looked at DAX, we looked at euro, looked at US dollar. Uncertainty. That's how we're starting the week. Let's take a look at some of the US indices. We'll take a look at NASDAQ, which is very rate sensitive. NASDAQ had a fantastic Friday, by the way, but let's take a look at it on a weekly basis. Okay, here's NASDAQ. So NASDAQ, it's looking slightly better. Friday was a terrific day on NASDAQ. We wrote an article on NASDAQ. It really telegraphed its movement on Friday, but yeah, it's again a pseudo type of doji. There's more there's more bullishness here on the NASDAQ. There's more bullishness there's a buying tail, but very small real body, no real excitement last week. Why is there no real excitement? It's being fed right off of the interest rate environment. That interest rate environment, we're getting poor data, but then pushback from the Fed. So that's creating an element of uncertainty. Let's take a look at one more. Take a look at the S&P 500. Okay, again, so the stock markets seem to be showing a little bit more bullishness, and perhaps the earnings results and the forward guidance may be playing into that. The fact of the matter is uncertainty, small body, and a little bit of a bullish tail there. But again, very small bodies on the NASDAQ, very small bodies on the S&P 500. DAX, got that doji. A lot of uncertainty. So I know I've said this over and over and over again, but the reason that I'm emphasizing it so much is because that's how we're starting this week, uncertain. So we combined last week's candle with the candle the week before. Didn't help us get any sort of direction. Let's go through to this week, because we are effectively looking. Well, this week, here is the uncertainty. What do I mean by that? This is now called an inside candle. The high and the low of this candle is completely within the range of last week. So in other words, we're getting no directional bias or prejudice. Okay, the bulls are not pushing it up, the bears are not pushing it down. We're effectively moving sideways, very flat. Take a look at the S&P 500 on the futures, very flat. Okay, let's go through to DAX. Okay, lo and behold, very flat. Sorry, I've changed the wrong chart. The DAX is over here. But the point's made. No directional bias at the moment, very, very flat. Let's take a look at Euro. Okay, Euro has got a little bit more direction to it. There's at least a higher high and a higher low. So given that there is so much uncertainty, what I think we can do is just take a look at the day trading layout, just to see if there's any sort of directional hints on the day trading layout. We're going to start off with the Euro, because the Euro over here, at least the Euro's got a higher high, higher low. So let's just bring up our day trading layout. Okay. And we did a whole webinar series on this. So if anybody needs information, you'll just email me. I'll send you a link to the videos we did on this. But you can see here, right, there's the fast stochastic on the daily basis. So we're looking at Euro, it's pointing up. So at least we can see there's a nice upwards momentum. What about if we go down to the hourly chart here? All right, so we've got here a Euro US dollar that is in its upper channel. We call this zone 1, between the upper red and upper blue. The stochastic here is above 50 as well. Just be careful, it's looking like it's about to slip below this 50. If it slips below 50, it's going to negate the hourly, right? So just be careful, it's in the right channel. It does look like it's losing a touch of momentum. Not surprising, because there is an hourly overbought signal on Euro. So what I would suggest is that, yes, there is some nice momentum on the hour, yes, in the right channel. Probably some sort of pullback here. Okay, some sort of pullback here is due. So that makes it a little complicated. So to be honest, I would put this on the watch list at the moment, just to keep an eye on it. Let's take a look at Euro. I beg your pardon, let's take a look at DAX. All right, so DAX, we've got actually a hook here. It's hinging downwards. Can you see? So it was moving up and now it's hooked to the downside. So that gives us a downside preference to start on the day trading. Okay. Where are we on the hourly? On the hourly, we still are in zone 1. There's an ambiguity. There's not much we can do with the DAX at the moment. No surprise there. We looked at the uncertainty in the market. Until we start getting some sort of directional certainty, it's going to be very tricky for us to actually allocate into positions. So the idea here is, if there is uncertainty, now listen to this very, very carefully, because I think this is where we can conclude. If there is uncertainty, there's heightened risk. Risk is a real variable. When we're looking at trading, we're always looking at the reward and we tend to ignore the risk. It should be the other way around. We should focus on risk, come to reward only after that. The risk is heightened. Why is the risk heightened? Because the uncertainty is heightened until we get some sort of directional bias. So you can see that to start the week, I think there is a certain caution that needs to be contemplated. And once we start seeing a more settled market, I think we could have a much more useful conversation, and I think that will come through tomorrow. So for the time being, the best chart we've looked at today, probably Euro, but that's looking overbought on the hourly. That needs to normalize. Once that normalizes, I myself probably would feel a lot more comfortable. All right, with that all said, if there's any comments, please go ahead and type those in. Anna just written something very, very cool here. A good definition of risk I heard yesterday. Risk is what stops you from reaching your goals. Very nice, and I like that. All right, any other comments, please go ahead and type those through. All right, nothing coming in. So let's conclude over here. I want to wish you guys a good day ahead, a good evening ahead. Let's do it all again tomorrow morning. Okay. Raj was saying, what was the uncertainty? What was the reason for the uncertainty? So Raj, remember that there was that poor data that we had on Wednesday, industrial production, retail sales. Then we had the Fed officials pushing back on that, and we've just gone into that blackout period, uncertainty. Okay. All right, guys, let's wrap up here. I'll put this on Telegram in the next next sort of half hour or so. Thanks very much. Speak to you guys tomorrow.